In this week's episode of the Stockscores Market Minutes, we're going to talk about when you should take a loss on a stock trade. It depends a lot on when you buy, and I'll show you a simple method to know when to get out. Plus, I'll do my regular weekly market analysis. We'll look at the day trade of the week on HUT and run a market scan in search of opportunity. So before we get started with the normal content for this week, I want to let you know that I have some free educational webinars coming up this week, Tuesday, Wednesday, and Saturday. You can see the topics on screen. Tuesday, I will look at investing. Wednesday, I will look at day trading. And then on Saturday, talk a little bit about the different training options that we have at Stockscores. To register for those, simply go to the Stockscores website, click on the Trader Training menu and go down to upcoming events, and the links to register are there. All right, so when should we take a loss on a stock trade? Well, there's some simple concepts that we need to understand, and the first is that the price you see in the market is the market's perception of what fundamental value is at any one point in time. So if a stock goes down to $8 and then starts going up again, what the market's really saying is that $8 is a minimum for what people will accept for that stock based on the fundamentals of the business, or at least the perception of the fundamentals. So what we do when we are trying to figure out where to take a loss is look for those floor prices, those places where price stopped going down and started to go up. We call that support. But visually on a chart, it's the little valleys that we see in the past, in the recent past. And those little valleys form support. And if price were to go down through that floor, it implies that there is some negative information that justifies taking a lower price. And if that is the case, then we may see that stock go even lower. So breaks through support are very important. Let's take a look at a chart here just to understand this better. So we have here support right there, okay? The stock went down and then it started to go up. Stock went down, started to go up. And this particular support zone was hit twice. Now this is a short-term chart, 30-day, 30-minute. If you had bought Camber Energy right here on the breakout, which was a decent buy signal for a swing trade, then you would say, if it falls down through that support, I'm going to get out of the trade. Now, along the way, there's new support zones. There's this one, and then there's this one. I call these inflection points. It's where price stops going down and starts going up. And you can see inflection point after inflection point. So at this point right there, we have broken down through that inflection point. So if you had bought at the highs, heaven forbid, and it went down through that inflection point floor, then you know it's time to get out. If you bought here and the stock had rolled over and actually gone down through support instead of gone up, then you would know it is time to sell. And so that's really the key, is always sell stocks when they break down through support. The time to take a loss is when they break down through support, and usually it's that breakthrough support that is the cheapest place to take the loss. It's never easy to take a loss on a trade, but if you don't, you may end up holding that stock a lot longer, taking a much bigger loss that ends up meaning that your portfolio is really harmed in two ways. One, you're taking the financial loss that is big, but also you're tying up your capital for way too long. All right, let's get in now to the analysis of the US markets, starting us off with the S&P 500. Which had a decent week this past week. We did a number of good things technically. First of all, that downward trend line, we had that confirmation break on Thursday. Of course, last week we tried to break and then we pulled back, but what we did is we built some rising bottoms. So we switched from pessimism, which is here, the falling tops, to optimism here with rising bottoms. And the break up through that downward trend line from this little pennant pattern was a positive. I don't think the short-term market is out of the woods because it still has lots of resistance to work its way through, but things are definitely looking better. And on the long-term weekly chart, we can now define a new upward trend line based on that pullback, and we've broken what's called a flag pattern there. This should lead to a resumption of the upward trend. If we were to now fall down through that support, that inflection point, well, that would be a negative. So the current, call it stop loss point on the S&P is right here. I don't know what that number is exactly, probably around 425 or so, and that is new support. All right, let's move on to the NASDAQ market. It also rebounded this week. We've had, roughly 6 weeks of weakness into there, and we built a rising bottom, and we've broken the cycle of pessimism. That should lead to the market moving higher. On to the IWM, which had a little bit of strength this week as well, but it was never as weak as the large cap stocks or as the tech stocks. It didn't have as much to lose because it didn't make the same kind of gains. The small caps have been going sideways for most of this year. Well, this week we broke this little pennant pattern on Thursday, tried to show some strength Friday morning and kind of fizzled out, and that's because of the resistance zones that this market is going to have to break through. So I think it's a decent looking market. I would call it neutral, but if it can break out through that ceiling around 233, then we may get a hot speculative market again like we had late last year and into early this year. All right, now on to the Canadian markets, and the TSX managed to make some really good gains this week on the strength of oil primarily. Oil was strong. We've talked about that the last few weeks. You can see the break of the downward trend actually the previous week, and then that just materialized into a nice resurgence in the Canadian market, again driven by oil. And so the long-term chart for the Canadian market is strong because we are breaking to new highs. We are not like the situation on the S&P where it's still below the all-time highs. We never had as much weakness, and now we're getting that strength, which takes the Canadian market to new highs. It is pretty selective in what sectors of the market are strong. Obviously, the energy sector is strong, and that contributes to the banking sector and some of those being okay, but other sectors are still pretty quiet. TSX Venture has managed to break that cycle of falling tops, and this is what's called a falling wedge pattern. The bottoms were not falling as quickly as the tops, and then this week we broke that, so we finally have a little bit of enthusiasm. And it's really timely because, of course, the market, the speculative market in particular, tends to be strong from October until May. Well, here we are mid-October, and just like it's looking at the calendar, those junior stocks, the micro cap, small cap stocks in Canada, starting to show a little bit of life. So you may see some action in the penny stocks in Canada. On the currency side, US dollar has given a buy signal a few weeks ago, and it continues to build rising bottoms slowly. And I think the US dollar more likely to go higher than lower. And on the Bitcoin market, of course, we broke that downward trend line, talked about that last week, and we got follow through this week. I think Bitcoin's probably headed back toward the highs, which is good if you're into the cryptocurrency. Ethereum kind of lagging a little bit, but also didn't lose as much as Bitcoin did. And so it's building what we call a pennant pattern. If it can break out of this, then it may continue into an upward trend. So things generally looking a lot better in crypto. On the commodity side, gold had some strength, I believe, on Wednesday, kind of fizzled out before the end of the week, and we have not managed to break any downward trends. Basically, we are holding support, but not showing a great deal of excitement yet, just maybe not as bad as it was a little over a month ago. On the on the oil side, you can see that oil moving to new highs, and that is good for the Canadian market in particular because there is such a heavy concentration of those energy names. But what you want to be careful with here is that many oil stocks are well into upward trends already. So you want to make sure if you're going to buy some of those, that you're looking at stocks that are breaking from low volatility, that are not well into an upward trend already. You don't want to chase stocks. You want to buy them when they start to move out of sideways trading patterns. All right, so then finally the fear chart. Fear is at a real low here, and it really demonstrates why you only want to use things like the VXX or UVXY as very short-term vehicles. You can swing trade them, day trade them, but long-term hold of these things is not a good idea because they decay in value over time because of the futures that they're based upon. All right, so my ratings then, back to bullish long-term on US and Canadian stocks, neutral short-term on the US, bullish short-term on Canadian, neutral on both time frames for gold, and bullish on both time frames for oil. We had more strength in stocks this week, and that's perhaps indicating that we are starting up that stock trading season that I've talked about a lot recently. It traditionally runs from October till May. The quantity of good trades is still kind of low. On day trades, there's lots, but swing position a little low still, but it is getting better. The charts are improving, and I think that sets up for a good run into the winter and into the spring. Precious metals have shown some life this past week, but they're really not breaking pessimism yet, so don't get too optimistic there yet. Oil is strong and fear is low. All right, now we're going to run over to the day trade of the week. And as I said, the day trading market's been pretty good. Every day there are a number of stocks that are quite hot, that are trading with abnormal volume. And it's really those that you want to focus on. I call those super alpha stocks. They have extremely high volume, extremely abnormal volume. And as I said, every day there's 3 to 5. Friday was a little bit less. And Friday, this was one of those stocks. It is related to cryptocurrency, which of course is a sector that is doing well the last couple of weeks. And you can see the action candle on the open, strong volume, strong price action. If you've been watching this for any length of time, these videos each week, you'll know that I'm always looking for that. These action candles, which is my own indicator. I'll talk more about action candles in the webinar that I do on Wednesday, which will be focused on day trading. We'll go into what those are and why they work and that sort of thing. So be sure to sign up. All those webinars are free. Anyway, in this particular trade, for $100 of risk, you would buy 550 shares. You want to buy $200 of risk, you buy 1,100 shares. For every 550 shares, it required $6,116 of capital, but this stock is marginable because it is over $3, so you only have to put up 1/3 of the capital, or about $2,040. By the end of the day, the stock was up 6 times its risk, so for every $100 of risk, you got a $600 gain. That's a 29.4% return on the margin that you could use on the capital required. All right, let's jump into the Stockscores market scan now and see if we can find any of those longer term trades. So to do that, we go into the market scan and we select, I'm going to run the abnormal breaks US scan this week. And let's just see if there's any stocks that are breaking from predictive patterns. Now, the great thing about this tool is we went from roughly 7,000 stocks that are listed on the US market and took it down to 35 that were showing some life. Here's GRNQ. It was a good day trader on Friday. I don't know that it's a great longer term trade yet because it is facing resistance here at $1, not really building any optimism yet. So it was a short term vehicle. A lot of these will be that way because they are breaking up into pessimism. You can see so many of the stocks that are showing abnormal action are breaking up into pessimism. Now, they can be good short-term trades, day trades, maybe even swing trades, because the pessimism doesn't really matter too much outside of that day. But when you look at a longer-term hold, a little bit more questionable. Now, LLNW, a decent chart here. It built a little bit of a rising bottom. It's broken the downward trend. Volume was a little higher than normal, price action abnormal. It has issues. It's going to find resistance at 3 and then at 330. So I wouldn't give this more than a 6 out of 10, which means I think it has a 60% chance of being a good trade. Here we have BTTR, also showing a little bit of life in terms of abnormal price action on Friday, but lacking the abnormal volume that I like to see. So I wouldn't say that one's great. It's better than most, but not great. This stock breaking the downward trend line, but no real rising bottoms, no build of optimism yet. Here's a stock that has been doing really well, and it really exemplifies what we want to see when we're doing these market scans. We want to see that build of optimism, the breakthrough resistance, and right there, that's when it starts to show life, start to behave abnormally. That was under $2.50. Today, or Friday, it hit $6. And so you can see that using this formula of looking for abnormal price action, abnormal volume out of the predictive pattern, out of an optimistic pattern. This particular pattern is called an ascending triangle. I'll probably talk about those a little bit in the webinars this week, Tuesday, Wednesday, and Saturday. So we'll leave it at that. And just as a quick aside, if you want to register for those webinars, go to the upcoming events area under the Trader Training page, and you can then register right here for free. You just click on the Register Online button and you can be registered. So I'll leave the discussion at that, and we will look forward to next week. And of course, the webinars Tuesday, Wednesday, and Saturday. Hope to see many of you there. I promise it will be informative and educational. But if you cannot make it, then we'll see you next Saturday or Sunday with our weekly Market Minutes video. Hope you've enjoyed it. Trade well.